Are you concerned about the financial health of Ally Bank? With recent economic fluctuations and banking failures making headlines, it's understandable to have questions. In this video, we'll delve into Ally Bank's solvency, exploring its financial stability and regulatory oversight to provide you with a clear and informative answer. Introduction. Ally Bank, a digital-only bank, has gained significant popularity for its competitive interest rates, user-friendly platform, and excellent customer service. However, like any financial institution, its solvency, or ability to meet its financial obligations, is a crucial factor to consider. In this video, we'll discuss Ally Bank's regulatory oversight, Ally Bank's financial strength, understanding FDIC insurance, assessing potential risks. By the end of this video, you'll have a better understanding of Ally Bank's financial health and be able to make informed decisions about your banking needs. Regulatory oversight. FDIC insurance. As a member of the Federal Deposit Insurance Corporation, FDIC, Ally Bank offers FDIC insurance on deposits up to $250,000 per depositor, per bank, per ownership category. This means that your deposits are insured, even in the unlikely event of bank failure. Regular examinations. Ally Bank is subject to regular examinations and supervision by the Office of the Comptroller of the Currency, OCC, a federal banking regulator. This ensures that the bank adheres to sound banking practices and maintains adequate capital levels. Financial strength. Strong capital position. Ally Bank has consistently maintained a strong capital position, exceeding regulatory requirements. This capital serves as a financial cushion, enabling the bank to absorb potential losses and continue operations. Profitability. Ally Bank has a track record of profitability, generating consistent earnings. This profitability contributes to its financial strength and ability to meet its obligations. Diversified funding sources. Ally Bank relies on a diversified funding base, including deposits and wholesale funding, reducing its reliance on any single source of funding. Understanding FDIC. How FDIC insurance works. FDIC insurance protects your deposits in the event of bank failure. If a bank fails, the FDIC steps in to ensure that depositors receive their insured funds, typically within a few business days. Coverage limits. While FDIC insurance provides significant protection, it's important to be aware of coverage limits. If you have more than $250,000 in deposits at Ally Bank, you may want to consider diversifying your deposits across multiple FDIC-insured institutions. Potential risks. Economic downturns. Like any financial institution, Ally Bank can be affected by economic downturns. A recession could lead to increased loan defaults and reduced interest income, potentially impacting the bank's profitability. Cybersecurity threats. In today's digital age, cybersecurity threats pose a significant risk to financial institutions. Ally Bank, like other banks, must invest in robust cybersecurity measures to protect its systems and customer data. Based on its strong regulatory oversight, solid financial performance, and FDIC insurance, Ally Bank appears to be a financially sound institution. However, it's essential to stay informed about the bank's financial health and to diversify your deposits to mitigate potential risks. By understanding the factors that contribute to Ally Bank's solvency, you can make informed decisions about your banking needs and have peace of mind knowing that your deposits are protected. Call to action. If you're considering opening an account with Ally Bank or have further questions, I encourage you to visit their website or contact their customer service for more information. With that said, thanks for watching and until next time.